What if everybody here would take your annual income and what if you could double that? And what if you had it tax free? Would you want to know how to do that? Now, of course, the first question you might say yes, but then you're going to say, yeah, but, right? Why is that realistic? Well, I'm here to tell you that most people don't even understand what money and credit are and why it affects whether it's taxable income or non-taxable income, or whether it makes you liable for something or not, or whether the mortgage is really a real mortgage and you got to pay it off. And now that you're caught up in all this maze of things, what do you do about it? Some of it's really hard to deal with. I mean, a credit card through a delete debt program, pretty easy to deal with. Third-party debt collector, pretty easy to deal with. But what if I was to say, hey, you can go apply for something that'll give you the funds to pay it? That's sort of an easier way out. Would you want to know how to do that? Well, I'm going to show you a few things here today. This is a preview of a much more lengthy class I'm going to hold here in the next few weeks for those who enroll in this new program. You can't even enroll in it as of tonight, but we'll have links. We'll have a sign up link for it here very, very shortly, the next day or two. But I want to tell you that just be ready. You're going to want to know about this because if anybody actually just go back and look, if you did file your taxes, a lot of people don't. There's reasons for that. If you know why you're doing it that way. But if you do, how much money did you pay in taxes? Or how much do you owe in taxes currently? Maybe you owe a bunch, right? So whatever the circumstances are, we're going to give you answers to that. If you're dealing with or trying to collect on you now, we're going to give you that answer. Now, currently, there is a CDP down on item 7 here on your screen. There's a conditional acceptance, a CDP conditional acceptance now in the delete debt package. But it just kind of stops there as to what you do. You kind of tie up the system and you ask them a bunch of questions they can't answer. It should stop a collection action. But there's so much more you can do. How do you settle these balances? Do you owe them? Or what can you do to avoid that happening in the future? That's what we want this whole thing to cover, this sort of new comprehensive approach. So I'm going to design a course that focuses on that whole spectrum of things when it comes to taxes. Now, am I your tax advisor? No. Will your tax advisor disagree with me on some of the points? Probably, because I found a lot of them don't have this information. Unfortunately, I wish I had a copy here, but the IRS code is 8,000 pages of 6-point font, and there isn't a complete paragraph in it because it always refers to another paragraph to see reference A, part B, and if it's not mentioned there, you go to part D of section 804. Something like that. I mean, it's crazy. Obviously, it was written to be quite confusing. We've simplified it down to the things that we need to know and that are in there, but also supported by law and case law. So everything we're going to teach in this is going to have some basis for what's in the law, what's in the case law. And by the way, we have to distinguish between what's in the statute, like Title 26, what's in the regulations, if they're not listed in the Federal Register, for example, as the Federal Register Act requires, which is an act of Congress, then they're not valid. They're not fully implemented. So there may be a statute that's been passed, but it's not been fully implemented. That's kind of important to know, isn't it? Because whether it applies or not. So, you could focus on, for example, a lot of people don't file because it's based on the idea that, well, if you don't live in the District of Columbia, and according to the IRS code definitions, go look up the definitions section and look at this stuff carefully. Um, you, it might tell you, you may be led to believe that you don't need to file. Now, keep in mind, though, if you've got 1099s or W-2 income and all these things that are still being reported, what that creates is an imbalance in the accounting. You didn't give them accounting at the end of the year. Your tax form is an accounting tool, and see it only as accounting. So they got this lump sum of money that's been deposited over here, or it looks like you get 1099 income over here, where you got to pay something. What do you do about that if you don't file? You're not filing, it's leaving that as unaccounted for. You got to account for that stuff. That's the downside to the people that promote don't file, because you got to do something still. And I can tell you, if you were to be charged with willful failure to file. There's 3 words in that charge, not one. Willful failure to file. And you know, if you've been around me very long, you know that we teach that a single word can be everything. So for example, if you don't file and you filed a W-2 or you got a 1099, because you fill out a form so that they can produce that and give it to you. Well, when you fill out that form, you said at that time, it's okay. You can treat me as a District of Columbia federal employee. That's essentially, when you look at the definitions, that's what you're doing. But then you don't file the accounting form at the end of the year to pay the tax or to at least account for that. You've left the accounting incomplete. You have failed to file. That may be true. Now, the question is, was it willful? Because it's willful failure to file is the crime. Okay. It has to be all 3 things, all 3 elements. Well, willful means you did it with criminal intent. In other words, you knew it was wrong. You knew you were supposed to file, but you didn't anyway. Now, if you don't have some proof that you weren't being willful, it's easy to make that stick to you. So you got to eliminate that. So there's a filing that you do ahead of time. You can do it every year if you want. Most people say you only need to do it one time. But once you file it and they don't answer, you're asking the questions about the law and saying, I want to file, but I need instructions. And you need to tell me, according to these issues that are in that letter, where I'm required to file and so forth, based upon the definitions, based upon all this stuff. I just need you to tell me so I know. That's establishing a position of non-willfulness. That becomes your evidence if you're ever charged with that. And when they know you got that document out there, that's your evidence. That's all you need is a single document. Now, am I telling you not to file? No, I'm saying, in fact, most people, I think they should file because of things they've done. But I can tell you how to make that filing go much better. But that's just one position. I suggest that if you want to do some of the other things we're teaching you, you might have to file, but you'll file again with a non-willful intent. Very important. And you establish that by the way you approach things. You don't go in there telling them, you don't have to do anything for them, or they don't have their work for you, and or you're a patriot, or whatever it is you want to call yourself. I don't take on any claims. I just ask questions. It's real simple. So a lot of people don't know, for example, that a lot of the IRS codes aren't in the statutes at large. The statutes at large are what have to be established for something to actually be fully implemented law. So there is an act, the IRS code, the code that was passed in 1933, and then there's Title 26, which is a code, a statute. It's not full. So there's a whole lot in there that's not actually in the law. So when you ask people, distinguish what you're telling me to do from what's in the statutes at large versus the code. And then there's a whole nother thing that has to do with whether the codes were published whether they were converted into implemented regulations, like that word, implementing regulations. If there are no implementing regulations, then there's been no notice given to the public of what the actual laws are. All there are is a bunch of regulations that probably don't apply to you. Most regulations apply to federal employees. But we treat ourselves as if that because we filed a W-2, we filed a 1099. We set ourselves into these voluntary positions. So you got to untangle a little bit of that, okay? But you use reason, logic. It's not just because I said you should file this and then this is over. No, I want you to understand why you're doing it, then you decide. Okay, that's how I teach. Another area we get into, and this is part of currently the tax and trust package we have right now, which is that certain trusts are considered exempt organizations per 508c1a. Does that mean? Now, people will ask me this question. I got it several times this week. Is this a common law trust? Is this a ecclesiastical trust? Is this what a title? It doesn't matter what you call it. And there are people out there on the internet saying, oh, you need one of these, and then you're good. Bull. You need to understand what the trust actually says, and it's not that complicated if you basically read. You need to know how it was structured. Again, it's only knowing how three parties have to interact. That's basically it. Then, after you start to operate it, and you operate that as deposits are exempt, and you went and looked up the definition of the word exempt, not hard to do. We're going to cover all this in this class, but in more detail than we have in the current course. But it's covered in what's called a convention. Now, you totally missed this if you didn't ever look up that word, because it says churches, trusts, certain churches, trusts, and religious organizations and conventions are exempt under this. They don't need to apply for a 501c3 status for a nonprofit. You already are exempt and already have it. You see, you have a choice of which one you want to operate under. Okay? Now, does creating that document alone solve all your problems? No, it's just one of the tools you put in place to change the way you do the business of you. Your life is a business. I had this debate with one of my son. He says, Dad, you say everything's a business. He says, that's just really crazy. And you must be obsessed with money and business. I said, no, it's just the way of the world. It is, you were given a tax ID number and your name was registered at the Secretary of the State when you were born. And the Secretary of State's job is to register and manage businesses. That's it. It's the birth certificate is not money. It's the acknowledgement of the creation of a business entity. Now, you don't need it to be more than that. But once you acknowledge the fact that your name that you're operating under, that's commonly called the all caps name, the point of it is that's how it's registered at the state under whatever. If it's all caps or not, it doesn't even matter. It has it. Goes and gets a tax ID number, a social security number. That's a tax ID number. So do all businesses. Interesting. And if you ever get audited by the IRS, you know who comes and audits you? The small business division. Everything is a business. So what I say is you have your business of you, but you create a trust that is the all caps name or what lowercase name, it doesn't matter, but it has the same name as me, comma, trust. In other words, there's TJ Mars and there's TJ Mars Trust, right? I create a second entity. It's another business entity. And I start moving more of my assets in there. I do more of my activity in there because you know what? It's exempt and it has a lot of exclusions. So when they do come after it, or if they come after you over here, your name, your original name, it doesn't have anything. It doesn't manage anything. It doesn't even have many contracts. The fewer contracts it has, the less risk it has. So it's just like moving all my business into a business. That is what I'm doing. I'm just moving into another business, a trust. And it could be an LLC. It could be a corporation. I can still use those tools as well. It's my choice because I understand what each of these things are and what they do. Now, you may not have all this knowledge now. It's taken me a long time to assemble all these things over time because I understand it, but it's not actually that complicated. I mean, I literally can teach all this in a few hours to somebody with some follow-up support. And that's what we're going to do is create this new course and support program. So now that you'll have that knowledge, you become like Robert Kiyosaki said, learn to manage your businesses, take advantage of the rules, do it intelligently, and stop looking for silver bullets. If you're looking for a silver bullet, you've come to the wrong place. Just go right on and hang up. Because you know what you're going to find with silver bullets? You get shot by them. Sometimes most of the silver bullet things that are out there on the internet are plants. They throw stuff out there. They get people to go out there and become a guru, teach you a bunch of garbage about something that doesn't make sense, and they can't explain it to you, and they entrap a lot of people into it. I would never do that. It's not me. You guys have been around me a long time, been doing business for a long time. I've been doing this website since 2012, so 13 years. Nobody's ever complained that I am a plant, okay, or that I try to give you wrong information. Have I been wrong? Of course. Everybody in this world has been wrong about something. But we've refined it. We've cleaned it out. We've filtered it down to the things that matter the most. Most people come to me and say, well, I said, why do you want to become a secured party creditor? And you want to, Get rid of your birth certificate. Well, because it really it's important to me that I get rid of my birth certificate. They don't even know why they're doing it. I'll ask them, why are you doing that? Well, because it'll make me free, blah, blah. I said, come on, where'd you hear that? You heard that from somebody. That doesn't make you free. What makes you free, folks, is right here. Nothing more than that. What you know, what makes sense to you, what you can do and explain why you're doing it to somebody. To me, that's freedom because we perish for our lack of knowledge. So we're trying to give you a little bit of knowledge in key areas that will help you manage better. At the end of the day, the goal is this. You end up with a whole lot more money in your pocket every year. A lot in some cases. If you're paying $100,000 a year in taxes, keep that money, put it over here, pay off your mortgage, or maybe use it just to pay down some things, or put it into investments, buy cryptocurrencies. Yeah, we'll have show you one cryptocurrency tool you can put money in that makes a very nice return. It's with this 9-year track record. Okay. But most people don't know about this stuff. So that's why we try to focus on it. So let's go back through some of the other subjects we talk a lot about. 12 USC 411 lawful money. A lot of people don't understand that concept. But when you make certain deposits, you can actually declare the deposit to be credit versus income. That changes it from taxable income, a taxable gain, which is what most people do just by if you make a deposit and you don't write anything on it, you're accepting it as that. That's why it becomes taxable income. It's not how much money you're earning, it's how much you're receiving in these Federal Reserve notes, what you're paying a tax for the use of. It's a use tax. It is constitutional. It says they can charge excises. It's an excise. Your income tax is really an excise on the use of the Federal Reserve notes and the form of that form of currency. Yet, right on the note, you have the option to opt to call it credit instead. But nobody does that. And that's what we do is we use that as exclusion when we make a deposit. Now, at the end of the year, all the money we received might be one number, but I also have a deductible amount of the same amount. So I do have to file a tax return to take the deduction. But if my deduction is almost equal to the total receipts that I got, how much taxable income is left over? Let me say that again. If I earn $100,000, but 100,000 of it is converted into credit, like a loan, to my account rather than income, then don't I want to let them know, oh yeah, by the way, yeah, I received all these dollars over here, but I also upon deposit declared them to be credit to account. And therefore, that's a deduction. But you got to do your taxes to do a deduction, but you can put it right on your taxes. I personally, and know others, that's exactly how they do it. And if there's excess money paid, they get even money back. Okay. I even went back a couple of years and amended. You could do amendments. Okay. And by the way, the best thing you can learn how to do is how to do tax software and do it yourself because you can make these little changes yourself and the tax software will actually do it for you. So when we teach you the lawful money strategy, that's in the current tax and trust course. It's already in there, but it shows you how to take all your dollars and convert them to credit and therefore have a reduction of taxable income. Okay, there's something for you. How do you maximize deductions, tax credits, and get large refunds? Well, if you're self-employed, you probably have nothing paid in, right, at the end of the year. Well, why not? What are they actually asking you to pay with? Did you know you have access to create credit as money? And I'm about to give you proof. You better take good notes here. But when you go, let's say you purchase a home, okay? You sign a promissory note. What actually happens in the closing process is that note is collateral. You think it's the house. Well, the house is a second collateral. That's why you need a trust deed and a note. If you're the banker, wouldn't you love to have double collateral on everything that's given to you? That's what they do. They take the house plus the note. The note is taken to the Fed window. And the Fed window, if you go through the Federal Reserve rules, I mean, I've gone through some of this. It's really interesting when you see how they actually do it. You go to the Fed window, they advance credit, not money, credit from the Fed window to close the transaction, not based upon the equity in the house, but based upon the note. The note is the collateral. So in other words, let's say it's like their note is like a piece of gold, because it frankly is. It's money they look at and say, oh, that's collateral. We'll advance money against that. Okay. So they advance enough to close the loan, right? They're sitting on this note and they're sitting on the house. Let me ask you this. When you sell the house, you get any equity that's out of it, right? How come they never returned your collateral back to you? They gave you the loan and you paid it off. Let's just say you paid it off or you paid towards it. Then why are they also keeping your collateral that you put up to advance the funds? This is the key to mortgages. And people miss this. They go off and argue on 100 different things that will not matter, won't work. You'll lose your house. Instead of just focusing on that, especially when they're in foreclosure, they look for everything. The fact is, where's the return of my collateral? Where's the proof that you actually loaned me money? In fact, you loaned me credit on my collateral. That's what I want to see the records of. And we start asking for that instead of all the other junk that people ask for, it makes a big difference. So we teach that in the Delete Debt program, how to tackle and approach it that way. But the other part of this is we're going to teach in this course, which is really going to be interesting to show you, is that there's several ways to create a problem for that note. That note is due back to you. Now, what happens? Let's just reverse roles for a second. What happens if you don't pay the mortgage? They foreclose. They create what's called a charge off. A charge off. And when they charge it off, they'll say, hey, we'll write that off as a loss. How can they write off a loss of something they never actually gave you an asset on? You gave them the asset, but that's what they do. It's a big tax game. What I'm going to do is show you how to reverse that, because guess what? If they can do it, so can we. So instead of them sending you 1099-C, you send them a 1099-C because it didn't return your collateral upon demand. Now, there's, of course, a process you need to go through. You need to send a demand and so forth. They don't pay it. You have the right to collect that and collect interest on it for the non-payment at a rate of up to 14% per day on the value of that collateral. So the longer they wait to not pay you, the bigger the bill becomes. You send out a 1099-C, which essentially keeps a credit. This is what they do on their books. I'm not telling you to do what they don't do. That creates a credit on their books for a loss of, could be a very large amount, because if it was several years ago, you paid off your mortgage, either whether it was paid off or foreclosed on, it doesn't matter. If you have this huge 1099-C account accumulating interest and they don't pay you, you can go to the IRS. This is my belief based upon my research, and you can put that in as a credit due to you. Now, will they pay it back to you in cash? Not so easy. There's a little extra step involved there. But you can use it so that if next year you have a tax liability, to say that you owed $50,000 extra, you can dip into that pool of credit and pay it out of the credit within the IRS system. It's simply called a loss carry forward. It's right there in the code. Go look up loss and loss carry forwards. That's where it'll describe how you do it. And then you carry it forward. Now, you do want to also establish a sole proprietor business. Everybody should have one of those anyway, because all the rules are built for businesses. So you call it a business loss, and then, because it is the business of you loss, and now it becomes a tax credit in the account, which you can keep a ledger of, and year by year dip into that, carrying it forward. And it might, that $100,000 might go to $1 million at 14% a day, but you can draw upon that just to deal with any tax payments you have. So if you have a business, you make $1 million, and you're, oh my gosh, how am I going to pay the taxes on this? Wait a minute. Oh, I've got this reserve of tax credits. You let that pay it. That's a very clever way to use deductions and tax credits. So again, a lot more detail to that as to how that works, which we will get into a little more detailed training. Now, here's the one that's fun. This is one everybody wants to know about. Everybody for years has been saying, well, how do I take a bill and I write accepted for value on it, and I send it back as payment. Well, technically speaking, that could work, but rarely ever does because most people don't know what they're actually saying and doing, and they'll get you on a mistake. That's it. They'll just ignore it. That's actually not the proper instrument anyway. There's a very specific set of rules as to what makes a legal bill of exchange. And if you don't cite the proper rules, they will ignore you. Now, let me get an example here. Um, this is something I did a while back, and it's really powerful stuff. So we did this. We ran this information we gathered, and then we ran it through AI to double check everything. Now, when you use AI, do not rely upon it solely as your source. But we went and we really challenged it, looked up these statutes, looked up these things. And what is your right to issue a bill of exchange along with tax documents for actual credit onto the tax account that at the end of the year, if you don't owe that much in taxes, it has to get refunded to you. This is how you get the money out of doing those methods. You don't do it directly to the creditor, you do it through the IRS. And don't be afraid. If you do it right, you're doing it in good faith. Void where prohibited by law. They can't do anything to you for doing it this way, especially if you do it the exact format they require, and then you cite the correct laws. They have to come back and tell you point by point why it's not valid. And if they cannot do that, you can assume it is. Now you have, let's say I have, let's say I have a business and I make $1 million a year in that business. Well, I'm going to owe a lot in taxes, right? I might owe $250,000 in taxes, right? At the end of the year, normally. And they're going to see all this activity. They're going to say, hey, you got to pay this. Let's say you didn't do anything fancy with your taxes, but you ended up with this bill, except you did one important thing. You must pay your estimated taxes. And there's a form called 1040 ES or 1041 ES. You can go look these up. And you would want to submit along the way enough money throughout the year to prepay your taxes. Otherwise, you get penalized. Some of your business owners know all about this. You're like, oh my gosh, what am I going to do about paying that tax? What I'm submitting to you is that you have the right to create more credit. Just like when you write a promissory note on a mortgage or on a car or anything, you sign a promissory note, you're creating the money. Well, now you're creating the money, but running it through the IRS for a bill of exchange of that credit so that you can use that credit. And you use it to prepay those quarterly taxes. Now, what if at the end of the year you overpaid that by, let's say, $100,000? You do your taxes. It says, okay, here's how much tax is due. Here's how much you paid in, and it shows the amount you put in on those 1040s plus the bill of exchange. Oh, but you're overpaid by $100,000. What is the tax form going to tell you to do? It's going to say tax amount due, tax amount paid, tax amount either refunded to you or still due. Well, if you overpay, just like in your W-2 income, it will show a refund. And then that's how you get a refund. Same thing is how you do it on a W-2 income. I don't care whether you're W-2 income or not. I'm just showing you that that's why you also want to have a sole proprietorship business. You can run everything through that. It's really as easy as creating a Schedule C. But you now could create credit. That's the type that gets refunded to you, not just the one you can use for future taxes. So there's two types of credits. This is the type that's due back to you. So what if you overpay by a couple $100,000 a year in these tax credits? Would that add to your annual income? First of all, it would reduce your out of pocket to pay those taxes, but you could end up with an excess every year that you could use to go expand your business, buy more crypto, buy more real estate, do whatever you want to do with it. Pay off a mortgage rather than fight the mortgage lender because it's really hard to fight them. But see, I figured it this way. If I pay them off, for example, instead of fighting them and losing my home, which I don't recommend doing, but they still never return my note and I keep asking for it. So I start charging them interest until they pay me back that note. Well, am I not getting the benefit of that note over here in this tax account that I can use in other ways? Yeah, I can use it just for future taxes. Or you really can't just take those credits and convert them into cash easily. But if you do overpay using the bill payment method I'm talking about, the bill of exchange, that is refundable. So anyway, we're going to show you how to use those two strategies in more detail. But I'm telling you how to, it basically gets done. Okay. And so, in Article 1, Section 8, Clause 1 of the Constitution, Congress is empowered to lay and collect taxes, duties, imposts, and excises. Right? By the way, that word excises, that's the one that gets you. That's when you're using Federal Reserve notes. That's what they're really charging you tax on, because you're calling it tax. You're calling it a cash event. We're calling it credit. That makes a big difference. What you call something, one word can change everything. I've said this a million times. So its Congress clause authorizes to impose taxes, but not restricted to the form of lawful tender submitted to satisfy such taxes. They didn't limit it. Okay, there's no statute at law requiring. Statute at law, I told you that's important. Far more than just statutes or just what they call law. That is the law. Requiring the payment must be made in Federal Reserve notes or conventional banking checks. Now, it'll say on the instructions, you must pay with a check or a money order, but they don't define it. Okay? And you can't pay with cash, which is kind of weird. So they're telling you that there are other options. So then we'll get into these laws a little bit more, but there's a Clearfield Trust versus the United States. These laws show essentially that commercial instruments are valid, but they have to have a very specific format and way in which they're written. It's not something you just write on the bill and send in. It's not something you just write on the back of the 1040 ES form. There's a guy teaching that. That's a problem. Let me give you an example why that's a problem. This should be a common sense to you. When I write you a check, I write all over the front, the amount, the date, sign, all that stuff. That's a check. It's offered to you. Then what do they tell you to do with it when you receive it? You flip it over, endorse it, just giving instructions what you want done with it, and then it goes to your account. Like these days, you do the thing with your camera, right? You can deposit. It says you flip it over, endorse it, and write for electronic deposit to commercial bank only. You're giving instructions as to what you want in receipt for it to do. Well, this guy's teaching you, take the 1040 yes form, flip it over, write all this stuff on the back, and then send it to them. If they were the receiver of that, how could they deposit that? Because it's not endorsed correctly. This is just how checks work. But he tells you he's got the right idea using a 1040 ES form, but the instrument you're sending with it is wrong. It has to be a separate attachment, and it's in the instructions on how to do that, the IRS instructions. So it has to be attached separately. So anyway, we try to show you that where those rules are, where the laws are, and so forth. Okay. Even the IRS code, you go to the IRM 3.8.4.45.5.10.1. You go right, look that up. If a bill of exchange or registered bill of exchange is received from a taxpayer, that sounds like they understand what those are. Authorizing the campus to settle their accounts through FedWire, that means the campus then converts it into a FedWire for the purposes of the way they do their banking. Send everything received to the U.S. Treasury address. Now, this is an instruction to any office receiving it, what they're supposed to do with it. Now, a lot of people read this and they start doing all these things. Oh, they send it to the U.S. Treasury direct. They aren't following directions. They don't realize this instruction isn't to you. All you have to do is send it to the right office with the right paperwork, with the right bill, and then they're supposed to do this. So anyway, in the instruction I send, it's going to have those instructions on it, and it's going to cite these laws, and it's going to ask them, if I'm wrong, please show me, according to these laws and acts of Congress and these Supreme Court cases, how it's wrong. Please tell me point by point. I'll happily accept your refusal if you do that. But you know what? They don't do that because they understand that you now have the right rules. Remember, we talked about being willful, doing things procedurally correct. That's where you win. So our idea is that you can overpay. You should pay estimated taxes every year. That's what flags you, by the way, for an audit, is not paying estimates. Very few people do that. But if you do make the payments with estimates and you have the proper instruments, proper documentation, proper legal support, then you'll actually just end up with an excess that you could get back. So that could be several $100,000 a year. I suggest you don't do this for millions. As a matter of fact, there's one line in one of the instructions. If you're not careful, it'll say, don't submit something over 100. I think it's over $100,000 checks. No. Anyway, there's a certain number. But if you read the instructions, it'll say, oh, well, then I don't want to do it for more than that. But you can do 4 of them a year. There's 4 estimated quarterly payments, and you can make it whenever you want. You could go back a couple of years and go back and make an estimate payment. Then go amend your return, and it'll show, oh yeah, there's excess taxes paid. And by the way, any of you who don't have an irs.gov site, irs.gov website account set up, you're making a big mistake. A lot of people are out there teaching, oh, don't sign up. You're volunteering for the system. That's not volunteering for the system. Okay? That's not volunteering for the system. That is creating an account, and you have to give a government ID. I don't care about that. It doesn't bother me. I'm just doing business like a real business person does it. I use the tools, I don't run from them. You got to get over that. I'm not afraid to call the IRS. I'm not afraid to go on there and apply for a tax ID number myself. I'm doing things according to a plan that I can support. As long as you can justify it, you're not willful. So there really is no law. We just ran this past using all these guidelines, and even Chat GPT agreed there's no law prohibiting from people issuing a bill of exchange. Now, initially, when we put it into Chat GPT, it did tell you couldn't, because there are places where it's written that you can't. But when you ask the question the right way, it actually says, wait a minute, based upon the actual law and the statutes at large and the Supreme Court cases, which it agreed to, he said, yeah, you're right, there is no law. So it's interesting how it changed its mind by testing out the Chat GPT part of this, okay? So we have to know that we can do these things. It could create a tremendous amount of wealth. Should you write for millions of dollars? No, I think you should never do it for more than 100,000, at least a quarter. But that adds up. It can greatly reduce your sleep loss. You could take that extra money and pay off your debts, some of them, versus just challenging them, and do it over again. Pay off your student loans, pay off your mortgage, live freer than you currently do. See, we perish for our lack of knowledge. Like I said, we don't perish because they enslaved us. No, they made it difficult. Yes, attorneys made it complex, but one thing they didn't do is they actually didn't break the rules. They just know how to use the rules. So I want you to learn how to use the rules. If you don't think that, if you like that philosophy, that's us. But you got to get in the training so you can get your mindset correct. And Neo was told in the Matrix, you must first free your mind. And that's what we're suggesting you do. Let me see what else I wanted to cover here. Got a few notes. But that's essentially a summary of what we're going to do in this upcoming training, this new package. It'll be labeled as new package on the join page. You just won't see it yet. If you're already in the tax and trust combo program now, it'll be an upgrade. If you already bought our full one-on-one coaching, it's included. You already got it. But anybody else who's just doing the delete debt program or just the tax and trust package, you'll have to upgrade. Or if you haven't done that, then we'll offer those people an offer as well to get the full package. The price and everything, don't ask me on the call here in a minute. Don't ask. I will put that up on the website. It's less than what we currently do for the full coaching package, so I can tell you that much. And then you'll get this sort of training. All right. So let me get over here to my notes again. We covered deductions, creating a bill of exchange, collection due process. By the way, the reason again, people say, well, if I request, if they're coming after, they're sending you liens and levy notices, the IRS is. Or it's coming from the state too. We can cover that too. But if they're sending you collection due process, they're sending you notices, we're going to lien and levy you, you better pay. Well, I say, well, why not pay? But why not also use their process? You all know that if you file, just back up a second. If you have a debt problem, mortgage problem, in fact, if you're getting foreclosed on and you don't know what to do, file Chapter 13 and get this training, because it will teach you what to do to settle the account. But the filing creates a stay. Okay, and that's what if Chapter 13 or Chapter 7 bankruptcy filing does. It immediately creates a stay. They have to stop collection activity, stop trying to take the house. you don't know what else to do, do that. If you're in a foreclosure situation, you're getting close, just do that. But stop a lot of the nonsense you're doing and just listen to the logic of what we teach, and you'll see what to do. But we're not here to get away with stealing the house free and clear from the bank. No, but they just won't allow it. The banks, the judges won't allow it. But I say stay it long enough to force them into a position to answer questions. Now, the collection due process request, which they give you the form for in every notice, they tell you what to do. File this form, and we will stay all activity. So it acts like a bankruptcy. But now we come in with a set of questions. And those questions, they ask a lot of questions, yada, yada, yada. If they refuse, they blow over you, you have the right to ask for tax court. You want to take it all the way. Do not be afraid of these people. Just understand what you're doing, what you're asking. And if at that point they determine that, well, okay, you do have to pay, now you'll know how to draft a bill of exchange and submit it to them. But in the meantime, you stop the collection activity. So you see, you have to deal with things in parts sometimes. So that's part of that story. So we deal with past problems, getting them current, avoiding future problems, getting tax credits going forward that'll keep you at a zero or low tax level, how to virtually convert all your income to credit on account, and continually put more money in your pocket. I don't know what else I can offer you that's more valuable than that. If you think that $10,000 is a lot for that, well, compare it to the alternative. Getting it wrong, not knowing what you're doing, paying taxes, paying more taxes than you actually are required to. I'm never saying, no, don't pay taxes. I'm not saying you don't have to. I'm saying pay what's due and required, but takes the maximum benefits you can. Okay. That's what a smart person does. They don't put themselves at peril. You be smart and wise. Well, now we think we have the combination of tools that will give you the greatest chance of success. Can we guarantee anything? Absolutely not. Because we don't know what somebody's going to do when they receive a document. We don't know what you're going to do when you get a phone call. We don't know, you know what I'm saying? But if you learn it well enough and you engage in it, you will have the tools to answer the questions. You don't have to ask us. We won't be here forever to answer your questions. You have to have enough knowledge and a basis for that knowledge that you can act upon it yourself. It's about being independently responsible, right? Personal responsibility. That's how we teach. That's how we always teach. I mean, people ask me questions all the time. Well, what do you think they're going to do if I do this? And what are they going to tell me if I do that? I go, I have no idea. I don't know what they're going to say. I don't know what their attitude is going to be. I don't know what their policy is, right? In some given state object or some bank. All I tell you is if you ask expecting the pushback and have your answer ready. We try to give you the resources to be able to answer that, do it yourself. We'd be irresponsible to just tell you to do something and not tell you why you're doing it, and then give you enough information that you can understand it and follow through with it. Okay, so that's why we want to stress that. Um, so these are some other resources that relate to money that we have on our website. You know, doing this way, you could pay off your mortgage more rapidly without all that hassle. You could pay off your unsecured debt. You can challenge it, which you should. It's because frankly, they can't prove it anyway. You could travel more, invest more, do more business activity. You know, ultimately, this country was built for people to start businesses. And if you're just a worker, you're choosing to really be more of a slave. Everybody, at least on the side, should have a business, at least a small one that's your, I call it, you know, your last name enterprise. Then you can you can put a lot of the stuff through your Schedule C form. And after you practice it once or twice, you'll find it's not as hard as you think. It's kind of like swimming. It looks terribly intimidating before you jump in the water. But once you jump in and somebody gives you a little floaty to help with and you learn a few strokes, you find out it's not so bad. Okay? But you can't learn it until you get in the water. I can't tell you how to do it. So got to teach you a few things and give you some baby steps to take. Okay. So as you start to earn income, we want you to have other ways to expand and grow your business. So if you want to learn about hedge fund investing, you want to learn about private capital you could use to expand your current business. Or here's a big one. I want you guys all to go take a look at this. Go to learn about Cryptex. Cryptex is a what's called DeFi staking program. It's been around 9 years without a glitch. And I've never seen anything like this that doesn't have a glitch after a year or two. So this one has really stood the test of time. I believe in it, but I can tell you it pays very well for a small amount of money put into there, and you put your crypto into it, and it goes into what's called a DeFi pool. Now, most programs like this don't show you what's actually going on. This program shows you everything all the way down to how the blockchain is working and how it's moving around and where the money's coming from. I mean, it's full disclosure, and that's very rare in these types of programs. So I put a little bit in. You can't even put more than $8,000 or $10,000 in this max. They're not going to come and try to take your life savings. But what DeFi investing essentially is essentially where you buy some cryptocurrency. You all can do it. It's a two-step process. You go to crypto.com or Cash App or Coinbase, open an account, and you get a little app on your phone. It works. Again, once you try it a little bit, swim, you'll find it's not that hard. It's another form of exchange of currency, is all it is. Think of cryptocurrency. My simple way to explain it is it's just a unit of ownership. Like if I own stock in a company or if I own LLC units in an LLC, it's just a way to measure what I own. And then they exchange some kind of coin, might be Bitcoin. It could be USDC or USDT, which are basically dollar backed coins, which in other words, they're worth $1. That's what they're always worth. But you can exchange this stuff easily. That's all it is. It's just another way to exchange things. So once you put it in here, then you can put it into a Cryptex type program. Cryptex will allow you to put it into what's called a DeFi pool. Now, what's happening is, just to explain what's happening in the world of cryptocurrency, you are experiencing the biggest shift since the invention of money. Now, you're going to get left behind if you don't at least get in there and learn a little bit. I guarantee it. You may think you don't need it. It is not tangible. It's not real. Well, is this really tangible? Yeah, I can touch it, but it also could go away tomorrow because it's dead. It's the Federal Reserve note. It could be disappeared tomorrow. I mean, they could just declare them all worthless. So it's not any less real than that. So I would suggest that you go learn a little bit about crypto, buy a little bit, go sign up. This is free to go sign up here. Go to this Cryptex page. And what I've done is that's a way to enroll very easily. And then let's see, where did I also create another link here? Let me open this up real quick. I also created a little web page. And if you can't find this, I'll send this to you. But if you go to this page and sign up for a little free account, it just takes a moment. It's like, it's like a bank account. You just sign up, but it's free. Get signed up. But then do the next step, okay? I mistyped this, so it's wrong. Cryptex.t. Go to cryptex.to is where you log in after you create a Cryptex account. Now, what Cryptex is a platform we can take some cryptocurrency, move it over to this platform, which essentially what they do is they use your currency for other people that are buying and selling currencies. Now, these are instantaneous transactions. What happens is somebody wants to buy USDC, but they have Bitcoin. They have to exchange it. Well, guess what? There has to be a middleman. So in the crypto world, we get to be the middleman, not the bank. So what we do is we stock funds in this account, and then as money is exchanged back and forth, conversions happen, small fees are charged. Guess what? We're the facilitator of those transactions by putting our funds through there, letting it sit there and work. You're actually making money, not interest. Because as transactions happen, we make a little piece of each transaction. It might be 1 or 2%, but they'd be happening thousands of times a second. And so we get to participate in a pool that helps fund that activity. And I consider it very safe because you're never really just depositing your money, you're putting it into a place where it's working. Okay. And they decided to create this way for people to share in the profits of these trades that happen. It doesn't matter whether the market is up or down. We don't care. I don't care. I'm just facilitating transactions. I'm the banker. So when you get in there, you get to be part of this little Cryptex bank It's been going for 9 years straight without a glitch. Everybody's getting paid out so far. I cannot guarantee future performance, of course, because I can't predict the future. But I suggest you do. Now here's a folder here. Go to url.org/cryptex folder. This folder will bring you to the document you're seeing on screen right here. So you can enroll in Cryptex using my link. This one here. That's where you sign up for an account. Just get the account signed up, grab a position. Then you can log in later using cryptex.to. Don't go there until you actually have an account. Then you go to this folder, and this is where this document is. Cryptex folder, write it down, /cryptex folder. So if you forget these links, it's on this document. This folder will download it to you. You'll have access to some videos. I'd recommend you watch this video overview. After you've done these steps, created a free account, watched this video, looked over this document here, there's some instructions. Please review them. And then if you have questions, contact me through the website, which you know how to do, okay? But I don't want to put that up on screen just yet. I want to just make sure you all use the contact information in the back office. You all can reach me. Just say, I'm trying to reach TJ. I just signed up. But if you don't, I really have too many people signing up. So I need you to complete these steps first. Sign up for a Cryptex account, know how to log in, and check out this folder where you can actually get the information on watching this video, and watch this video. After you do these steps, this is about a 20, 25-minute video. It's not very much time. I will show you, like I can show you right here. Now, this is a small account. I have friends that have accounts 1,000 times bigger than this. But with only about, I think a total we put in about, to this date, around 8,000 over 6 months, we end up with all these contracts. You can only buy so many contracts. But they're starting to generate revenue. And as contracts are sitting there, they begin to grow in value. It's compounding. This is all the magic of compounding, but daily compounding, not annual compounding. So there's a 24-month contract, 36, 60. I bought a block of each of these, okay? And the end result is just now, this is just like today, there was a $2,600. That's money that I can pull out. And I'm a small player on this. I got in late to the game, but guess what? It's never too late the way this is structured, until they just shut it off and say nobody else can join. But right now, there's so much growth in cryptocurrency all over the world. Billions and billions a day are moving through. They need more transaction people to manage the growth of. In other words, they need the middlemen. The middlemen are needed for exchanges to happen. All we're doing is help funding the exchange, and we get a little piece of that profit. That's all it is. So that's what it's grown to. And this is right. Like if I could project myself forward to the end of these contracts, that's what I would draw out right now on $8,000 put in here. I know that sounds too good to be true because you're used to conventional thinking about money. You have to understand all we're doing is profiting from the growth of the transactions of cryptocurrency. And there's a lot that goes on there. I know people that literally have hundreds of millions of dollars and have drawn out tens of millions already because they've reached 36 months. So one of the older ones, 60 months. I mean, it's been around 84. There are people actually drawing out these large returns over that period of time. Again, don't look at this and say, well, it's too good to be true, can't be too, blah, blah, blah. It's a multi-level marketing thing. That isn't what makes it work. It's just not. There is a referral program, okay, with full disclosure, and you should take advantage of that. I know people that personally earn this kind of money and way more every single day. And they pull it out only by up to about 10 referrals because it grows really, really fast. Now, if you could use the income, great. If not, just ignore it. You just say it's too good to be true. Or, you never want to give your currency to somebody else. I get it. Don't put all your eggs in one basket ever. That's why these guys only allow you to put up to a certain amount. Then that's it. You only get one shot at it. It's a small amount. But anyway, if you can use that, go do as I said. Just really the best thing to do is go to this Cryptex folder, /Cryptex folder. This link will pop up. Follow these steps. And after you watch the video and set up the basic account, contact me. And I'll basically tell you to do these steps right here. If you already have cryptocurrency, You want to probably round that up to a little bit larger amount if you want to maximize this. You don't have to, but it's, it depends how much you want to earn. Okay. This is a full-time business for some people. Very quickly, full-time business. People don't even need to already have cryptocurrency. They just got to go get some and start. Okay. So anyway, I think that's pretty exciting. It's an opportunity, and don't worry about the taxes on it, guys, because we are going to show you how to deal with that. All right. People go, it's like my mom used to say, gee, they make all this money. I'd hate to pay their taxes. I'm like, well, I'd like to have that problem, right? So it's the small thinking about money that keeps people down. Stinking thinking gives you one thing, more stinking thinking. So don't do that. All right.